Hello and welcome to another video with myself, Paul Shields, looking at trading the foreign exchange market. I'm looking at doing a bit of a test on this demo account. It's Admiral Markets demo account, and I'm going to look at doing a bit of a strategy test over the next few months. Look at checking in. I'll try and do it every day, but it might only be 2 or 3 times a week. And we'll record the outcome of the strategy as it goes along. I need to stress this is for educational purposes only. We're doing it on a demo account, and we're testing a strategy, so by no means should anyone take these as trade signals. This is not a strategy that I've tested live before. I've done plenty of back testing on the ideas, but it's not something I've tested as a forward testing arrangement before. So, don't follow along with these in a live account, or don't take it as signals. It's purely educational. I've been trading for roughly 8 years. Using many different strategies and techniques. I've traded Elliott Wave, Bollinger Bands, harmonics, market maker theory, support and resistance, all sorts of things, all sorts of different methods. The one thing I haven't, and I've had element of success trading those almost all of those other strategies out there. You can find profitable strategies, you can find profitable trades using those strategies. This was a trade, one of the only trades I've taken a few trades on this account. It's a fairly new account. We've got $10,000 equity in there, or 10,291. Most of that profit on that account, I only opened the account last week, most of that profit came from this short on the euro pound, and that was taken using median lines or pitchforks. There are other reasons why I was looking to short the euro pound as well. Obviously, pound strength. Euro was showing not as much relative strength as pound, so all sorts of other reasons. But this was the sort of main signal for this trade. Was this median line. We also had a support resistance level right in here. You can see prices hit it, bounced off it, gone through it, come back right through this range. It was bouncing off this level around 90, roughly 90.80, 90.77 is just where I dropped that line. But you could move that line up and down within that sort of zone anywhere you want. And you can see we broke through that support resistance area again here. Retested it, also broke through the middle of the median line, and at that point you've got an 80% chance that you're going to reach for the outer edge of your median line. So I took a short on the retest for a nice profitable trade, exited. It did run through a little bit further, but that's just using a simple median line strategy to find trades. So you can use all sorts of different strategies to find trades. Personally, I'm of the belief that I don't think it matters what the strategy is that you're using to trade. You can use indicators. There's people that, there's traders out there that make consistent money using stochastic divergences, using Bollinger Band strategies, using moving average crossover strategies. There's scalpers out there that make good money. There's swing traders. There's people that only trade daily charts that make consistent incomes, or consistent, they're consistently profitable on their trading accounts. I think it doesn't matter the strategy. What it comes down to is the trader. And that gets back to this challenge account, or sort of strategy test that I'm going to do. The one thing I haven't really looked at in my trading career is trading simple patterns, head and shoulders, double tops, double bottoms, flags, pennants. And I'm going to record on a simple spreadsheet the outcome, positive or negative pips for each of those head and shoulders, both bearish and bullish, symmetrical flags, triangles, pennants, ascending flags, descending flags, and double tops and double bottoms. Double tops and bottoms, the bullish and bearish, I'm not going to split the two, split those up. We're just going to record positive or negative pips, and at the end of that, we'll do it for about 2 months, or as long as this demo account lasts. I opened it last week, so it should be about 3 months, I think, that they let it run for with Admiral Markets before they cancel it. So I'll record those details, and at the end of it, we should get a reasonably good idea of the win rate, and whether that trading, whether the strategy has a profitable outcome at the end of 2 to 3 months. I'm going to be applying those specifically on a 1 hourly chart off a fairly good range of across a good basket of pairs: Euro Pound, Pound USD, Euro USD, US Yen, New Zealand USD, US CAD, Aussie USD, Euro Yen, Pound Aussie, Pound Yen, Pound New Zealand, Euro Aussie, Aussie Yen, and CAD Swiss. We do have a lot of volatility in the pound at the moment, so I may have to dial back in October and not trade the pound pairs as much. So that's why I've included some other pairs like pound, CAD Swiss, Aussie, some Aussie pairs, Euro Aussie might get a little volatile. Aussie US as well is not a pair that I generally trade, but I'm going to include it in this. On the $10,000 account, I'm going to look at risking 2% per trade, and a strict reward of 4%. So it's going to be 1 to 2 risk reward every trade. I'm not going to deviate from that. Trading only on the hourly. I'm not going to do any higher time frame analysis to determine the setups. I'm going to stick to the one time frame, the hourly. I generally get 2 or 3 times a day where I can sit down in front of the charts and have a look and see what's going on. I'm not going to sit down. I'm not going to be watching these all day. But there are times where I don't get to look at the market before London Open, so that might impact some of the opportunities. I may miss some opportunities due to that. And I'll decide whether to include those stats for the missed opportunities or not, or whether I only record the ones that I take. I might actually just leave it that I only record the trades that I take, because that's more realistic. You're never going to get to catch every trade. I'm also only going to hold 3 trades open at a time, and I prefer not to hold more than 2 of the same currency. So if you've got a Pound USD, don't really want a Pound Yen or a Pound Aussie open at the same time, or if you've got an Aussie USD, you don't really want a Pound Aussie or an Aussie Yen open. You want to try and spread your risk across the basket of currency, across maybe a Euro trade, an Aussie trade, and a Yen trade, or CAD Swiss is in there because it's not correlated to either Pound or US. A lot of these pairs are Pound or US, or that's why the CAD Swiss is in there. They'll all be on the hourly chart, like I say. My double tops and double bottoms won't necessarily. I'm not looking for exact pip to the pip. I would consider this a double bottom here on the Euro Pound. The fact that this low here is slightly higher than this low here, I don't think it matters. It's a double bottom. So in that situation, I'd be looking to enter with a pending entry above this high. As prices down here looking to form, you'd put your pending entry up here, or on the close of this candle, you'd just open it, or put a pending just above that candle. your target would then be a measured move from the high of the double bottom, the sort of forms a W. So the peak of the W to the bottom, 36 pips. So that's your target. Would be 36 pips, and my stop will be half of that. So my stops will always be determined by whatever half the target is on the pattern. So your stop would be 36 pips, so your stop's going to be 18 pips. On this situation, wouldn't have been touched, but we'll see how it goes down the track. I'll be back shortly with a video. I'll go through each of the pairs and see what patterns I can see setting up for now to start the week, and whether any pending trades need to be put in place.